Yesterday, we had consumer price index announcement, and Bitcoin had surged to $19,000, testing the 2017 bull market peak. Are we going to see a break above that peak, or is it going to act as resistance and we're going to get a reversal and one more move to the downside? Well, I'm betting on the downside, and today I'm going to go into the technical reasons of why. So if you like today's video, like, subscribe, hit the bell notification. Let's look at the technicals on Bitcoin. We're going to start on a daily chart on Bitcoin. And the key thing I want to address is we seem to be getting reversals around the consumer price index announcements. So if we look at the last one over here in October, it went up. The last one in December went down. And we had one yesterday. And it looks like, because it's coincided with some other factors, it might be a peak and we might get a move to the downside. And one of the reasons that I'm really looking at it is the momentum has been overbought for quite a while now, so we're overdue a correction. Now I want to look at some technical patterns. So I'm going to zoom out. I was talking about this yesterday. Zoom out of the market. Let's look at the 2017 peak. So we had a massive bull market in 2017, and it peaked at around $19,000, the $20,000 mark over here. Now I've extended that line across, and we can see we are testing that mark again. Now, this is really, really significant. So we had a surge in price yesterday, mainly because of the consumer price index. But look at this right now. We are literally testing that high of 2017. So what we're going to do now is I'm going to drop down to a daily chart, and we're going to do some Elliott wave counts, because it's one of the ways of really looking at the psychology of buying and selling. And if you can see this, I'm telling you, it can make a massive, massive difference. So what seems to be really, really clear now, as we have more market data, I'm actually going to drop down to a daily chart. Let me go to a daily chart. It's going to make it a little easier for us to see. Let's just clean this up over here. And I want to just zoom in like so. All right, so when I'm looking at the weekly chart, sorry, daily chart, since November 2021, this peak over here, we've had this massive surge down. We had some type of ABC correction, which now looks like a wave 2. We had a second real big surge down, which now looks like a wave 3. We've had this correction over here, which looks like a wave 4. And it looks like we're on the final part of a wave 5. Now there's a particular, look at this. This is my alerts just popping up. So I'll check that later on once we finish this video. That's on the Euro US dollar. I've got some alerts set up because we're looking to short that market as well, looking for some pattern reversal signals. So what I'm going to identify now is something called an ending fifth wave diagonal. It's the only condition where an impulsive wave structure is okay for the prices to overlap. It can be it's not that common, but when it does occur, it can lead to some really, really good price movements. So we've had this move down. Looks like an ABC correction. So it looks like a wave 1, a wave 2. We had this next surge down over here. It looks like some type of wave 3. This ABC structure has overlapped into this range over here. So that's why it's referred to as a fifth wave diagonal. And what's likely to occur is getting one more move to the downside. So I'm just going to update that drawing on this particular chart. And I'm just going to quickly draw that really, really clearly. We've got this wave, what looks like a wave 1, a wave 2, a wave 3, a potential wave 4, not confirmed yet, and a final wave 5 of a wave 5. So I'm just going to change this to a lower degree count, and I'm just going to change the color so it makes sense, because we want to really articulate this so we're really, really clear on what we're looking at here. So what I'm betting on with Bitcoin right now is that we are likely, looking at the momentum, looking at the pattern, looking at this ABC structure, looking at the resistance from 2017, we're likely to get one more move to the downside, break this low over here, and go back into the 15,000, maybe even the 12,000 range with Bitcoin. That's really, really important. So we're going to cover a bit more detail now on how I'm shorting this on an hourly chart and how we're doing some risk management as well. There's no guarantees in this game. There's only risk management, capital preservation, and high probability edges. By the way, if you want to learn how to do Elliott waves, one of the most powerful things that I've ever come across in the last 15 years of trading. I now teach it in my 4 Secrets Masterclass. It's free. It's one of the 4 secrets. And it's just a practical way of seeing buying and selling behavior crowd psychology where you can see as a leading indicator what's likely to occur next and place your trades in accordance to that as well. So this is free, is in the link below. So now let's just jump into a 1 hour chart with Bitcoin. So what I'm looking at over here with Bitcoin is we don't need to get too anal about the wave count, but it's definitely a move to the upside. And we had CPI yesterday, and there's really aggressive moves to the upside. So we are overdue a correction. So we're likely to get at least some type of three-wave move to the downside. Not guaranteed, but likely. So what I plan to do with this, I've actually got my orders in already, is short the market. So, if you don't know already, you can actually make money as the market moves down. So we're shorting the market. One of the main reasons is the daily momentum is strong overbought, which basically tells me that the upside is limited. Right? The upside is limited and we are due a correction. And I want to go in the direction of the trend. The 4 hour is bearish. We do have some bearish divergence as well. There's a few other technical factors that's looking healthy for a short trade. But we have to risk something to find out if we're right. So if I zoom in over here, and just bring this back across like so, I have a nice simple strategy. Very, very simple with tight risk management. I'm going to risk 2% to find out if we're right. I've put in an order below this swing low over here. If the price goes below the swing low, we'll get triggered. My stop loss is above here. And I'm going to get risk-free quite soon if the price moves in our direction. Because when we're looking at buying and selling behavior, one of the reasons I really like technicals is we can see what the market shouldn't do if the trend is to continue to the downside. And if it is, then we can use that logic on where to place our stop loss, which is our insurance, to see that, basically locking in profits as the market moves in our direction. So always trade in the direction of the trend. So this is overbought, this is bearish. So the trend dashboard tells us consider selling. And then we want to look at pattern, price, and time. And by the way, if you want to get access to the dashboard, we built this, and I built this for you because it's my 15 years of knowledge baked into the programming of the dashboard. So it's very, very intuitive. You can now trial it for 30 days, £1. It's in the description link below. Check it out. It will take your trading to the next level. So let me know what you think regarding Bitcoin. Do you think it's going to break that resistance of 19,000 from the 2017 high? If it does, that's going to be a really bullish sign. Really, really bullish sign. But it needs a lot of work to be done. So it's possible, but unlikely. Possible, but unlikely. So I'm betting on the downside, but we'll see how it unfolds. Let me know what you think. I'm going to finish on the quote of the day. We're going with chapter 5. It's one of my favorites. It's Leonardo da Vinci. He says, simplicity is the ultimate sophistication. Now, one of the things that I've noticed that some of the people have a challenge with is news. News sometimes is important to know, right? But over information, you get paralysis by over analysis. And one person is saying this, which is up. Another person like me right now is saying down. Which one do you go with? Well, ultimately, you want to have a trade plan, have a statistical edge in your favor, so you're the casino, and then consistently apply that edge, knowing that it's not always going to play out. Hence, we have capital preservation and capital risk. So we're going to risk 2% to find out if we're right. If we're right, we make some good profits. If we're wrong, we might break even, we might take a small loss, we might make some small profits, or we might take a full 2% loss. And that's just the nature of the game. So to keep it very, very simple, my edge is really a 4-part edge. Is momentum, ideally 2 time frames, pattern, price, and time. Even the first 3 is a really, really strong edge. And 20, 30, 40% of the time, it's going to play out. And when it plays out, we'll get a 2, 3, 4, maybe even sometimes a 5 times risk reward. And if you do that over 100 trades, over 1,000 trades over the long term, that's how you make money in the business of trading.